Second quarter earnings season kicks off after the bell this afternoon with Alcoa.
Yeah.
Is it going to be good? Is it going to be bad? Should we just all go home now?
Well, it's not looking very good. And one of the key things I think that to look at has been the number of companies that have pre-announced negative earnings and essentially lower than expected earnings versus the number of companies.
How many we got up to the bad side?
Well, the key thing is the ratio. I think it's more than 60, I think, already.
Okay.
But the ratio is of bad to good is the highest it's been since the fourth quarter of 2008. Which was
not very good.
Right, which was the worst quarter ever for S&P 500.
But we're not at 2008 levels. It's the worst since, right?
Right, exactly. Okay. The worst ratio since. So we're not talking about the earnings that are going to be necessarily negative, but if you strip out.
And by the way, you've got that ratio we're just talking about there. You can see it on screen, and you can just see how it's popping back up there.
Right.
Not a good sign.
But basically, what you're talking about is low single-digit earnings growth. If you strip out, because of Bank of America's mortgage settlement a year ago, the comparison to this year is skewed
because
exactly.
of that. That's right.
So,
and just to be clear, that was actually the mortgage settlement was in the first quarter of this year. That was for a different mortgage settlement in the second quarter of last year.
Right. So if you strip out B of A's results, you're basically looking at flat earnings growth versus a year ago.
What about on the revenue side?
Revenue is looking about the same. Revenue is looking up about 2%. The revenue basically is being dragged down mostly by the energy sector. The energy sector and utility sectors are the two sectors that are expected to perform the worst. Financials among the best because of the B of A thing.
Right.
But for basically for the 10 S&P 500 sectors, you're really looking at mid to low single-digit earnings growth and mid to low single-digit revenue growth as well. And the story is really demand. I think we're not seeing it enough demand in the economy.
Demand and soft pricing, and that's going to probably be one of the issues when Alcoa reports today.
Right, and the expectations are relatively low for Alcoa. It looks like there'll be some things. They're trying to restructure some of their business to battle against weaker aluminum prices and weaker demand. And so their EPS is looking to be down about 80% versus a year ago, and a year ago probably had some skew to the upside.
Now, of course, all of this and the fall off in demand and questions about demand is coming on the back of fears of recession in Europe, slowdown in China, and this is going to hit U.S. companies. One of the things I think is fascinating is people forget 25% of S&P earnings come from overseas.
Right, and that a year ago, what you were seeing was a much brighter picture, particularly in Asia, in terms of earnings growth and demand coming from those economies overseas. Europe obviously wasn't great a year ago, but it was a lot better than it is today. And both of those areas, Europe and Asia, have stalled out.
And it's funny you mentioned stalling out. We saw Ford 2 weeks ago saying that was the rest of the world that was really going to hurt their earnings.
Right, and also another component to that too is that you're seeing a stronger dollar versus a lot of currencies, and so when their earnings overseas get translated back from the currency in the country that they're making their money, it back into dollars, it takes a hit. It makes a hit on their earnings there too. So. One of the things to watch, investors should watch too, is the little game that Wall Street tends to play, which is they emphasize the number of companies that are beating expectations and not necessarily.
Of course, they've lowered the bar throughout the whole time. All right, John, so it looks like at best we're talking about a C to a B for second quarter earnings season, not a great grade.
I don't think you'd even get a C plus out of this, really, and it could be worse.